Bill Geiger to my right. Bill Geiger, how you doing, my friend?
Doing well, sir. How about yourself?
I'm doing great. It's always great to see you.
Nice to be here.
Wanted to bring you in here because I saw this article in Market Watch. The headline, Would a Lost Decade Derail Your Retirement Plans? Not necessarily. An alarm bell start going off in my head because you and I have talked about how a lost decade can be damaging. And oh, wait, I scrolled down a few paragraphs and it said it may not be harmful unless it's the last decade you're working.
Yeah, before you retire.
Before you retire.
You know, we always tell people 5 to 10 years from retirement is the red zone.
Right, exactly.
And you do not want to turn over the ball in the red zone. You don't want to have a big loss. It is 5 to 10 years before you retire and 5 years after you retire. It's extremely critical time that you cannot have big losses. The math just works against you.
Why do you have to bring up a football reference after that Bears game, Bill Geiger?
I know.
You don't want to be relying on a Hail Mary before your retirement. Let's say that.
Amen. Well, it worked for the Commanders, huh?
Yeah, well, let's not go there. Let's use a hockey reference instead. You're in the last 2 minutes of the period. You got to protect your what you've gotten. That is absolutely true. Because there's a lot of different, look, we are at these real great highs, and it feels really good.
Yeah.
And I think that if people feel a little apprehension about what's next, that's a healthy feeling to have.
Yeah, it is. We were just talking about that earlier today, that I met with a guy who's in his 70s. Mm-hmm. He's planning on retiring in 2 years. He's 100% in the market.
100%?
100%. It's like, I get heart palpitations when I see something like that because it doesn't take much. Oh, and by the way, he does not really have enough to retire the way he wants to.
100% is...
So a little hiccup.
Yeah. Well, and you don't have to go that far back to find a little hiccup. 2022, the markets are down 20-some%. Yeah. And then, gosh, he worked a little longer and the markets rebounded quicker. But if his retirement date was that year instead, he's missed out on a lot. He hasn't set himself up for having income, which is always what you talk about.
The first thing you have to really concern yourself is having a big loss. But the other thing is, and people don't talk about this, John, is you have a really, really big job in that 5 years before you retire. And that is creating the income that you're going to need when you retire. Because when you retire, newsflash, the paychecks stop coming.
Yes. Unless you have a pension.
Yeah. The paychecks stop coming. And effectively, you're looking at 25 years of unemployment. Mm-hmm. Imagine, today, you lost your job, you couldn't work for the next 25 years.
No good.
Where would you be? You'd be drawing down the money that you had and hoping that it would last.
Now, when you say create income, I think some people think, oh, no, well, I have my 401k, I have my IRA.
No.
I'm going to be drawing from that. That's my income, right?
No, that's not income. That's pulling money out of the pot. Okay, when you retire, 95% of the country, when they retire and they stack their Social Securities on top of each other, it's not as much as they need. Mm-hmm. There's a gap there between what they're spending and what's coming in. They need to be able to fill that gap every single month for the rest of their life in a manner in which they can depend upon it happening, that it is happening. And what we do, what our mission is, our philosophy is, take some of those assets that you have and create an income stream for yourself that when the income that from your job stops, you push a button, and from that investment, you start getting income in your checking account every month on the same day, just like your Social Security. That's what we mean when we say income, not pulling it out of the pot.
Well, some people might say that sounds too good to be true. That sounds like a pension. That sounds like something I don't have and I can't have. So let's take a look under the hood. How do you create that income for people?
In the old days, when bonds are paying 10%, you just bought a bunch of bonds.
And that was guaranteed income?
And that was guaranteed income, right? You bought it, if you bought munis, it was tax-free at a federal level. So in the old days, we did that. Now interest rates are so low,
generally
relative
speaking,
to them, that we have to use different tools. And we've talked before about creating a private pension plan for yourself, and there's ways to do that, a little bit more complicated than what we have time for here. But there's ways to do that You take a piece of your portfolio and you create that private pension plan. And by the way, the earlier you do it, the more powerful it is.
Or the more when you have these gains that you're looking at, when you look at your net worth that you think is realized gains, and it isn't until it's gone, and you take it out. Using the last couple of years' growth can be what you use to build this.
I tell people all the time, we're at all-time record highs. Take some of that money, set it aside, and create an income stream for yourself. Then when you need it, you push that button, and the income turns on, just like a pension plan, just like your Social Security. And with that, imagine yourself in two scenarios. One is you're pulling money out of a pot of money, and you're kind of sort of wondering whether it's going to last. The other scenario is you push a button, income is coming in every month, and it's guaranteed for the rest of your life. Which one would you rather live under?
I want
the latter.
I want to be able to sleep.
Yeah.
I want to be able to
Amen.
sleep comfortably. Bill, we got to put you on hold here. Really quickly, though, if someone's running out of their car, what's the phone number? People
800-681-2498.
One more time.
800-681-2498.
Bill Geiger here at 650 on WGN. And Bill Geiger, we had a text asking your thoughts. Do you have any crypto? That has obviously been a hot topic for a couple of years.
Yeah, not personally.
Mm-hmm.
I do have clients that do. Mm-hmm. Every once in a while, we're surprised. Somebody says, "Oh, and I own this too."
Okay,
and it's a big chunk of money. We don't sort of don't believe in it. But what I always tell people is, look, if you want to do it, take 3% of your portfolio and do it with that.
Right.
If you hit it big, it's going to change your life. If you lose it all, it will not change your life because it's only 3%.
I guess
and that way you get to participate.
Yeah, if that's the thing. If it's a FOMO, which Bill Geiger, the kids, is fear of missing out, is that acronym.
Yeah.
If that drives you so much that maybe that's the...
take 3% and go to Las Vegas.
Yeah, there you go.
That's basically what you're doing.
Yeah, essentially what it is. Okay. By the way, our phone number, 312-981-7200. Bill, we were talking during the break about this huge growth in the sale of annuities.
Okay.
And things of stability.
Right.
And I wondered why that was. What do you think it is driving that?
I think it's twofold. Part is there's a lot of people approaching retirement. And annuities, depending upon the type, they're kind of like the new bonds. Mm-hmm. All right, because bonds don't pay much anymore. But I think the bigger portion is maybe since COVID, the world's got a little crazy, if you haven't noticed.
I have noticed, yes.
And there's a lot of people that want a portion of their portfolio that they don't have to worry about, that they're not going to lose a lot of money. And also, you can create some very nice income with them. So I think that's it. The last 4 years have been record sales of annuities.
Right.
4 years in a row. Each year is bigger than the other. And I think those are the two reasons that go into that.
Well, I think you're right about the emotional side of potentially losing or even worrying about losing what you have built up. That emotion usually, I think, is greater or more severe than if you don't make all the possible gains of a big market run.
Right. Well, you're talking about fear of losing out versus fear of missing out.
Yeah. Yeah, right.
And
FOLO versus FOMO.
FOLO.
Yeah. We just made something new.
Missing it? No, whatever.
But I think there is a fear of, I think the fear of losing is greater than the fear of missing on some of the gains. Not that what you do for clients doesn't get those gains as well. Those are part of the plans that you set for people. You're not asking people and recommending people to take everything they've made, put it in this only safe, slow-going thing.
No.
That's not what you do.
No, that's a tool. That's one of the tools that we use. Mm-hmm. The rest of the tools are in the market. They're hedged. Mm-hmm. If anybody out there knows what hedging is, it's kind of like you're driving a car, you have car insurance, right?
Right.
Even if you don't get in an accident, you still have car insurance because if you do, the downside is too great. Well, on our equity portfolios, we hedge them. We effectively have car insurance on them.
Portfolio insurance almost.
A safety net. So you can stay in the market, you can sleep at night, but if the market really tanks, and we don't know when that's coming, but we know it is coming.
There will be corrections and bears, yeah.
So if that happens, you can stay in the market. If that happens, you're okay.
It's almost like wealth insurance. That's my phrase. I'm not going to make you say that.
Wealth insurance.
I kind of like that,
I like that, too.
You're going to steal it?
I'm going to steal it.
I'll give it to you for free, my friend.
Thank you.
Well, maybe not for free.
But
We'll talk afterwards.
I will credit you. I will say Jon Hansen told me this in 2024 before he owned WGN.
Yeah, there you go. Well, I think that, it kind of makes sense. You've built up this wealth, and you're proud of it. You should be. You've worked hard. You've dreamed of this retirement. And Bill, I think that gets to the root of one of the reasons why what drives you is you have a lived experience with a family that built wealth and things didn't turn out exactly how they were supposed to.
Well, for my father, that was a pension plan that got cut in half. And that's why I have this big thing about when someone has a pension and they have the opportunity to take a lump sum.
To do it.
We take the lump sum out and we create a private pension for them. Right. And that way they're not depending upon their ex-employer to make great financial decisions and still love them for the next 25 years.
Yeah. And by your dad, getting that cut in half, you watched your mom, a wonderful woman who had plans for retirement and she wasn't able to live the way she deserved to live at that point, wanted to.
Well, it was a strain. It was a strain, and it was an unnecessary strain. Yeah. So, if you're listening, you have a pension, you have an opportunity to take a lump sum, pay attention to the phone number we're going to give you.
Yeah, go ahead and do that right now.
800-681-2498. And we'll sit down and explain to you just how to create your own private pension that you control and you're not worried about your former employer. Also, it's a pension that when you and your spouse are gone, there's money there that goes to your family as a legacy. Yeah. A regular pension that's gone, poof, it's gone. So if you've got a lump sum, if you have that opportunity, let us run the numbers for you because it kind of sort of makes sense.
I just like we can't explain every individual situation here on the air, and looking under the hood is hard to do. But that's what that meeting is with you. You show them what you're doing. So people just calling you, if they feel like this doesn't seem like what they originally thought they were going to do, it seems a little strange. You're going to chat through them with it. Nothing's going to be.
Our basic thing is we sit down with folks and we help them plan for their retirement. Typically, it's a couple coming to us 5 to 10 years from retirement. And we help them make sense of everything. We help them create a roadmap, and we help them create the things they're going to need. Safety, an income, growth, but in an organized, planned manner. So they've got a roadmap.
Wealth insurance.
Wealth insurance.
Bill, give us the ending. What do people need to know?
First 5 callers, 800-681-2498. If you have $500,000 or greater, we're going to sit down with you, do a complimentary full-blown retirement plan. No cost. I'll sit down with you personally. 800-681-2498.
Talk near Thanksgiving, Bill, okay?
Amen.